Hey guys, welcome back to the Bitcoin Fortress podcast. This is episode 188, recorded here today on November 2nd, 2025. We are at block height 921942. Moscow time is 9:07, and fees are 1, 1, and 3. So we went through the news this week, and we got a whole bunch of segments pulled for you this week, and we'll get to weekly podcast themes, take a look at our featured Substack post, quick reminder about the Bitcoin Fortress book series, and then wrap it up. So let's get into it. First item is Bitcoin ends October in the red. I was joking about the hunt for Red October last month, and I think I may have manifested it into reality. October failed. So what happened? Well, Bitcoin closed down in October about 6%. The first Red October since 2018. So now everybody's talking about that. Traders expected a breakout based on seasonal patterns and history, but again, as I always like to say, Bitcoin does what Bitcoin wants to do. And it did the opposite of what everybody expected. Macro pressures, Fed yields seem to have overwhelmed historical trends. I know I've been reading a lot lately about liquidity drying up, and that the Fed is trying to keep the wheels on the bus, um, and all that good stuff. So that probably had a lot to do with it, even though the Fed cut rates. That really didn't help a whole lot since everybody was expecting it. And in fact, I think the Fed came out and said that they were going to, well, that additional rate cuts or whatever this year is not a given, and then that caused the market to sell off a bit as well. So again, the big takeaway from this is do not trade on memes. Hold for the long term, and we'll see how November goes. Spot ETF outflows hit about 600 million this week in US Bitcoin ETFs, that is. Um, Institutions could be locking in Q4 gains or rotating risk. It's really hard to draw a narrative. Not a sign of abandonment, but it does show sentiments cooling, at least from those people that are buying spot ETFs, whether that's institutions or individuals or a mix of both. And as I've probably said before, it's a great source of demand when price go up, but when price go down, it's also a great source of selling. So kind of a double-edged sword having the institutional adoption. Of course, they all want to buy themselves a new sweater, so they're going to take profits. They're not going to just hodl like those of us that hold in cold storage. Is this a buying opportunity for long-term stackers? Possibly. I mean, if you're just dollar cost averaging, you're still getting relatively cheap sats here in the range of $110,000, which is quite a bit less than the all-time high, and a little more expensive than 100. And of course, could it dip below 100? Of course it could. So if you're buying dollar cost averaging, you're just fine. Again, as we mentioned earlier, Fed cut rates, but Powell dials down his dovishness. So the Fed cut rates 25 basis points, but emphasized that more cuts are not guaranteed. Markets were, of course, hoping for a pivot, a dovish pivot, and Bitcoin really didn't get any boost from that. Real yields, at least as if you believe the reported rates of inflation, real yields are staying high, and that could weigh on all risk assets. And again, macro still matters to Bitcoin, so probably a good idea to keep an eye on that. And again, just stay humble, stack sats, and the market will do what the market will do. Government shutdown, year's a record. I think if it makes it to next week, Thursday, it's going to be the longest government shutdown ever. And crypto policy, of course, is stalling. So the US shutdown is basically delaying SEC and CFTC action on pending crypto regulation. No news is good news, or not. Actually, in this case, no news is not good news. Institutional certainty depends on regulatory clarity, and anything that slows that down, including the government shutdown, is probably not a good thing and will cause Bitcoin to probably flop around here and chop chop, uh, maybe even to the end of the year. Who knows? It does benefit, though, Bitcoin does, from being legally simpler than altcoins. It's already recognized as a digital commodity, and its regulation is pretty straightforward. It's really the altcoins that are struggling a bit. There's been no alt season, but of course, I don't care. Um, but there are many in the crypto industry that do. U.S. Treasury Secretary Scott Bessent, in an interview, said Bitcoin never shuts down. On Bitcoin's white paper anniversary, which was last week, and if you missed it, happy Bitcoin white paper day to you. Treasury Secretary Scott Bessent praised Bitcoin's uptime. So again, never shuts down is a sharp contrast with the government itself, which shuts down. And of course, symbolically powerful, even though not a price mover. It's pretty rare to. You certainly wouldn't have heard Janet Yellen talking about that. Let's just put it that way. Altcoin ETFs launch, but flows underwhelm. So some ETFs for Solana and other alts debuted with limited traction. Not a shocker. Bitcoin ETFs still dominate in volume and assets under management, which is uh, a good thing, and kind of reinforces the Bitcoin only thesis in the capital markets. But nothing's stopping the altcoins, it seems like. And, they're still good for speculation if you like that kind of thing. But I'd just rather save and hold and not worry too much. Bitcoin is the not worry too much coin. MicroStrategy reports 2.78 billion in profit. So MicroStrategy came out with Q3 earnings and highlighted a massive unrealized gain from its Bitcoin holdings. This is public proof that corporate BTC treasuries are paying off. Of course, now the accounting rules allow you to mark up and mark down your Bitcoin. You don't, the old rules, you could only mark them down if they declined in value, and you couldn't mark them back up, and that was pretty painful if you're a public company. So now they're marking to market, and so it goes up and down. And in this case, it was a big up. And this does, of course, strengthen the Bitcoin as reserve asset case. And Strategy is certainly the leader in the Bitcoin treasury, and probably the most innovative of all the Bitcoin treasury companies, in terms of the things that they're putting out. I'm still kind of mind boggled by how they can pay 7, 8, 10, 12% yield on preferred stock. But they have a plan to do it. So Hopefully, it doesn't all end badly for them. Glassnode reports long-term holders move 62,000 BTC. Now, this is a topic that we've been talking about here for a little while, that there's been a lot of selling by long-term holders for whatever reason, taking profits, diversifying into other things, whatever. And that, of course, is adding to the supply. But then, of course, there's been a lot of demand far outstripping the mining supply that's coming in from the miners. And a lot of the miners are not selling the Bitcoin that they're producing. They're stacking it. So, anyway, there's been a big disconnect between demand and supply. But of course, long-term holders adding to the supply provides those coins that whoever's buying now, whether it's treasury companies or ETFs, need. So, on-chain data shows large Bitcoin transfers from long-term holder wallets could signal profit taking or internal reorganization. So again, just because you're moving your coins around doesn't necessarily mean you are selling. But again, something worth watching, what types of addresses and what's happening with exchange inflows for the next moves. But it's fairly normal towards the end of a bull market for long-term holders to take some profits and, I don't know, buy a house, who knows, whatever they're doing with it. One analyst reported that Bitcoin is in a quote silent IPO phase. A viral post this week compared current Bitcoin price action to a quiet IPO. No hype, no moonshots, just steady foundational building. And again, this kind of fits perfectly with our accumulation mindset. Um, and and certainly reducing the volatility of Bitcoin is helpful from the standpoint of store value concept because it's pretty hard to um, trying to live on a Bitcoin standard and at least in the short term, a bag of groceries ends up costing you more in Bitcoin terms than say a week ago or whatever because of the fluctuations in the value of Bitcoin. But if you zoom out, um, you're going to be paying a lot less for steak 10 years from now than what you're paying today in Bitcoin terms. And so I think that's really the focus that you need to continue to maintain, um, despite the short term volatility, which can be annoying, especially if you drop your whole paycheck into Bitcoin and you're paying your mortgage and other stuff. Next up, we have regulation clarity grows, but so does complexity. So the new EU and US frameworks are expanding clarity, but they do add compliance burdens. So Bitcoin benefits from its simplicity. Altcoins, well, they may drown in regulatory red tape. Again, especially if they're viewed as securities, but even if they're not, um, I don't know how many of the altcoins can be considered commodities, but there's certainly some complexities involved in them with having founders, having boards of directors, marketing teams. I mean, they are very much run like businesses, unlike Bitcoin, which is leaderless and just kind of out there in the wild. Retail caution grows amid ATM and scam risks. So, again, US press has been covering Bitcoin ATMs and rising cybercrime. And so adoption and risk seem to be rising together. This is, of course, a strong reminder that self-custody and privacy best practices matter, and certainly be careful who you hand your Bitcoin over to if you're going to be, let's say, borrowing against it or investing in something. Bitcoin's no different than cash or anything else. If you invest in a scam, you will get scammed. Citi and Coinbase announced a partnership for institutional rails. This new partnership builds infrastructure for large fiat to Bitcoin settlement, which is a pretty interesting item here. This is how the quote unquote plumbing gets built, and institutional demand is preparing for using Bitcoin settlement rails, not abandoning, which is, again, an important uh, view, an important uh, milestone, let's say, for adoption in general for Bitcoin. So, like to see that kind of thing. November seasonality, of course. Now that Red October is in the rear view mirror, now analysts are looking at November seasonality for Bitcoin. The average is up 42%. The median is up 9%. And I'm sure that Bitcoin will not disappoint us either to the upside or the downside by the end of the month. We'll just have to watch and see. But November is historically Bitcoin's best month, but we do need to be careful. 2013 skews the data dramatically. If you pull 2013 out, gains are more modest. And I have read that volatility in November tends to be extremely high. And so, if you thought last month was wild, well, buckle your seatbelts. And again, you have to use stats for context, not conviction. Uh, definitely don't try to trade your Bitcoin or leverage it or anything like that. Just again, best thing to do is just stack, hold in cold storage, and pop some popcorn and watch what the market does. Altcoin season hype returns. Didn't quite get it yet, but some analysts expect the altcoins to rebound in November. Sounds more like hopium, but uh, this is a great chance or an opportunity here to reiterate why Bitcoin isn't one of many. It is stands by itself, and really, it's I wouldn't chase trends. Bitcoin alone is enough. I talked to somebody once that thought, well, I don't really have much money, so why? I my plan is to buy a shit coin and then have it 10x and then convert into Bitcoin, and that's what a lot of people think they can do. And it's kind of to me, it's like buying a lottery ticket. If you go out every week and you're buying a 5, 10, 15, $20 lottery ticket, you're probably going to end up not winning the lottery, and you're going to end up spending a lot of money. I mean, if you think about it, like $80 a month, I mean, that's like over $900 a year. So uh instead, if you put $900 a year into Bitcoin, well, you'd have actually much more than $900 worth of Bitcoin. So Um, again, that's probably not a good strategy to try to speculate your way into wealth and then roll it into Bitcoin. But I guess that's just not going to stop people from trying. Bitcoin hash rate has been in the news, still climbing. Very good sign for the network. Obviously, the network needs to stay decentralized and secure for it to retain its value. Network hash rate remains strong, signaling high miner confidence, physical security, all-time highs, and again, the energy FUD, which I don't really hear anymore, is because now AI consumes way more energy than Bitcoin mining, so you don't even hear about it. But it is certainly a good use of energy to keep the network secure. It has my full confidence and support. Retail FOMO versus institutional patience. So while ETFs show outflows, cold wallets and long-term positions are growing. Institutions are stacking slow and steady. Uh, so I guess the message here is emulate MicroStrategy, and MicroStrategy buys at any price uh, and regularly, and that's probably the way to do it. Not trying to meme coin your way into wealth. Real yields are rising again, of course, and again, I'll set aside my commentary on how fake the CPI numbers are, and let's just pretend that those are correct. US real rates ticked higher, which puts pressure on all assets. So this is kind of a headwind for Bitcoin, obviously a headwind for other risk assets too, because I guess in theory, if someone could buy a risk-free, I love that, risk-free treasury that yields a real rate of return in excess of inflation, then they're going to do that all day long, even though they're actually being debased and they just don't know it because the data is fake. Anyway, long-term Bitcoin is still the answer to fiat decay, as we all know here. So just keep on stacking. Simplicity wins. Bitcoin only in a noisy week. So this week proved it again. Outflows, altcoin ETFs, macro tension caused a lot of confusion. Bitcoin remains steady and dominant. And simple is powerful. Came across an article this week about from the Human Rights Foundation warning about quantum threat to Bitcoin. And this is not a FUD piece. This is actually pretty well put together. Again, links in the show notes to everything that we go over in the news, but you might want to check it out. Liked it so much, I actually added it to the queue for a upcoming Bitcoin Fortress Substack post. HRF report warns that 6.5 million Bitcoin may be vulnerable to quantum attacks in 5 to 10 years. Now, nobody really knows exactly when quantum computing is going to be able to crack the code, so to speak, the cryptography that secures not only Bitcoin, but like everything else, banks, governments, militaries, um, pretty much the whole trust layer of the internet is at risk. So quantum secure cryptography is going to need to be in place well before that time comes. This especially affects old untouched addresses that used the P2PK protocol. So if you're using something more recent like Taproot or whatever, you're probably in your wallets, you're probably okay as long as your public keys aren't exposed. So that's the other thing. Address reuse is a bad thing, and using old uh, protocol versions and not newer ones is probably also a bad thing. But again, there's mitigations, address hygiene, like we mentioned, protocol upgrades, maybe moving to Taproot or one of the more recent versions of your wallet would be a good idea. And of course, again, avoiding address reuse. And of course, multi-sig doesn't hurt. Although it can find your private key, it will be a little harder with multi-sig, but I think multi-sig under Taproot actually does a better job of hiding the public key. And so that actually is probably a really good thing to implement for yourself. But eventually we'll have to switch to a new signing protocol. So again, quantum panic is not quantum reality, so stay informed and let's not freak out. But anyway, it's something worth checking out. So that, again, link in the show notes to that. Other thing I came across was kind of interesting. This is an interview with Sean Bill, who's I think he's the co-founder of the Bitcoin Standard Treasury Company. Talked about Bitcoin as super collateral. Pretty interesting. So the Bitcoin Standard Treasury Company, Sean Bill co-founded it actually with Adam Back, and they have not quite come public yet, but they're going to, I think, in the fourth quarter or something like that. Anyway, he outlined in this interview how Bitcoin could serve as pristine collateral for credit markets. Um, think sovereign debt, but digitally native. A future where Bitcoin backs lending, repo, and leverage. And again, this ties very strongly into the long term adoption story and why holding now matters more than ever, because obviously, with that demand comes price action. So, anyway, that's also linked in the show notes. Several themes arose in the week, taking a look at the different Bitcoin podcasts that were out there. The first one, Real Flows Matter, ETF outflows, MicroStrategy gains, Coinbase partnerships show where Bitcoin is really being used. Macro over memes, Uptober failed, rate cuts weren't bullish, time to upgrade from Twitter to charts. And I'm, by the way, I'm not on Twitter, only on Nostr. So link also to my Nostr in the show notes if you want to follow me there. I like it so much better than Twitter. Twitter's just a lot of noise. Uh, Next theme, Bitcoin only advantage. So in a week of altcoin ETFs and seasonality, hopium simplicity won again. And that simplicity is Bitcoin, of course. Long-term lens is the next theme. From the silent IPO to quantum threats, Bitcoiners are building for decades, not days. And then final theme, institutional infrastructure rising from treasury uses to collateral frameworks. Bitcoin is graduating into global markets and still so tiny relative to all the other assets that are out there. So again, very, very long-term bullish. Would like to highlight this week's featured Substack post. Um, this was episode 8 of a short video series, um, really tracking my first book, The Bitcoin Fortress, uh, kind of book for beginners. And this really talked about the future. So we look at the long arc of Bitcoin's adoption curve and why everything from corporate treasuries to layer 2 payments is building towards something massive. And again, this ties pretty well into this week's news segments. Did want to give you a quick reminder about the Bitcoin Fortress books that are available. There are 3 now. Um, and we have Bitcoin Fortress, a simple guide to Bitcoin for beginners, uh, Bitcoin retirement and estate planning, and finally, the Bitcoin lifestyle. So, again, those are available on Amazon in multiple formats. And so, check that out in the show notes. And that, my friends, is a wrap for episode 188. If you got value from this episode, share it with a friend. Rate and review on your favorite podcast app. That really helps a lot. And check out the show notes. Again, I publish those along with the podcast on Podbeam and all the different podcast apps. And check out Substack. Become a subscriber if you like it. It's free. Um, and always remember, stay humble, stack sats, hold your own keys. See you all next week. Bye bye.